If you're struggling right now finding out what type of headlines causes risk on or risk off markets, this should help you out. So first, you have to understand cause and effect, right? And you have to know what is good and what is bad, pretty much. So here's a perfect example. If Trump wants to cause escalations with Russia, and he says we're going to put submarines out there facing Russia because if at this date they don't follow or they don't step away from Ukraine, you have to ask yourself, is that good or is it bad? If that date does come and Russia does not back down from Ukraine, which direction you think the markets is going to go, right? Especially if the US attacks. First, you have to ask yourself, is that bad or good? So if it's bad, you can anticipate a risk off market. So before you enter, do not assume. Wait for the markets to tell you if it actually cares about the news. Then you're going to see gold push higher. You're going to see equities get weaker. Safe haven pairs get stronger. So here's another example if we're talking about tariffs. If the US and China and they come out and they say that trade talks are actually positive, we're coming to an agreement, we actually want to move forward. You have to ask yourself, is that good or is that bad? Plus, does the markets care? So if you see that the markets care about that, then you can anticipate a risk on market, which will be supportive for the stock market. And then you could see gold push lower, and then you will see safe haven pairs get weaker. So just use that example, guys. Just have to understand what is good and what is bad. But most especially, right, you have to know, is this impacting the markets today? Does the markets care about this situation, right? Because if there's something that Trump just had a good health test, markets don't care about that, right? But the markets do care about tariffs. The markets care about geopolitical events. The markets do care about economic data. So hopefully that helps you guys.